Tax return 7. Example Taurus Toy Store LP. EIN is noted here. Perla and Margarita started a toy store 1/15/2022. The address, Perla owns 50%, Margarita owns 50%. They each contribute $2,500 per pay form 1065. Don't forget to make your depreciation journal entry. So this is the unadjusted trial balance. So to have an adjusted trial balance, you're going to book depreciation in this scenario. So what you're going to do is you're going to debit depreciation expense and credit accumulated depreciation. So when you do that, you're going to have $30,000 in cash because that's not going to change, $7,000 in accounts receivable, $22,000 in notes receivable, $12,000 in furniture and equipment, and then you're also going to have $12,000 in accumulated depreciation. So assets are going to be $71,000 minus $12,000, which would be $59,000. So $30,000, 17 plus 12. Sorry, 7,000 plus 22 is 29,000. So right here. So 30,000 plus the 29,000 plus the 12,000 minus the 12,000 is 59,000 of total assets. You're right here. You have the $17,000 in accounts payable and $10,000 in notes payable, which you get from here. And then you have right here an M1. So you use an M1 whenever you have assets of less than $10 million and then your revenue is also less than $10 million. There's, if you have more something over that, then you would use the Schedule M3. So in this case, you have less than those amounts, so we would use an M1. Net income per books is $39,000. How do we know that? Right here, net income per books is $39,000. Okay, the difference between book and tax in this example is $12,000 of depreciation because that's the journal entry that we made for tax purposes. Common book tax differences are travel and entertainment, guaranteed payments, depreciation. Of course, depreciation is one of the ones that for sure you're gonna see every single tax return that you do. You're also gonna have non-deductible meals. Not anything that's not deductible for tax purposes is going to be included here. And then so there was $5,000 in capital contributed in cash, so you're gonna put it here, $5,000. If it would have been property, it would have been here. You're gonna have the net income right here. So 5,000 plus 27,000 is 32,000. So that 32,000 is gonna go up here. So 17 plus 10 is 27 plus 32 is 59. So notice that the balance sheet balances. Notice that the gross receipts is 65,000. Your cost of goods sold is 21,350. In this scenario, we should have got the net income right here of 43,650. We're gonna have it here under total income of 43,650. Repairs and maintenance is 4 through 5. If you do get number 3, if you miss line 3, I'm not gonna deduct it since I didn't put it in my example. This is the importance of reviewing your work. So 43,650 minus 4 through 5 minus $2,950 minus $12,000 minus other deductions. It's equal to $26,600. All this information I got from the trial balance and then the adjustment that we made. So the reason why depreciation is $12,000 is because we bonus depreciated, and bonus depreciation for the year of 2022 is 100%. So you can bonus depreciate, anything that has a life of 20 years or less. So that is actually a really cool tax savings. So in page 2, you're going to see right here. Well, page 1, you see that it's a limited partnership. LP means limited partnership. So right here, domestic limited partnership. If it would have been a limited liability company, this would have been checked. So I didn't note if they were foreign or not, but let's see, did any foreign or domestic corporation, partnership, including any entity treated as a partnership, trust, or tax-exempt organization, or any foreign government owned directly or indirectly an interest of 50% or more in the profit, loss, or capital of the partnership. For rules of constructive ownership, see instructions. Okay, so there is no corporation, there is no partnership, there is no trust, no tax-exempt organization, so no. The owners are individuals. Did any individual or estate own directly or indirectly an interest of 50% or more in the profit or loss or capital of the partnership? Yes. So in this case, there was a yes because an individual did own 50%. So 2 of them actually. So in this scenario, a Schedule B1 is going to be included, but I did not include it because that's another schedule. But for this particular part of that report, we're going to list yes because that is the case. At the end of the year, did the partnership own directly 20% or more? 20% or more, or own directly or indirectly 50% of the total voting power of all classes of the stock entitled to vote of any foreign or domestic corporation. For rules of constructive ownership, no. Own directly or an interest of 20% or more, or own directly or indirectly an interest of 50% or more in the profit or loss or capital. That information was not given, but for this example, I assume no. Okay, right here. Does the partnership satisfy all 4 of the following conditions? The partnership's total receipts for the tax year were less than $250,000. That is true because it was less. The partnership's total assets at the end of the tax year were less than $1 million. That is true. Schedule K1 are filed with the return and furnished to the partners on or before the due date, including extensions for the partnership return. Yes. The partnership is not filing and is not required to follow Schedule M3. No, they do not. Remember the rules that I talked about earlier. So the answer is yes. Is this a partnership a publicly traded partnership? No. The information was not given, but no. During the tax year, did the partnership have any debt that was canceled, was forgiven, or had terms modified so as to reduce principal amount of debt? That was not listed in the information right here. Sales and interest income, dividend income. That was the only information that was listed in there. So no, that was not the case. Has the partnership filed or is required to file Form 8918 Material Advisor Disclosure Statement to provide information? No information was given on that, so no. And any time during the calendar year did the partnership interest that no information was given on that. So no information was given on that. There was no 754 election. There was no like-kind exchange. No. No foreign partners. No information was given on that. Did they have to file a 1099? Yes, because rent exceeded the threshold, and then they also paid somebody $600 for tax prep fees, which also makes them eligible for a 1099. So yes, they are required to do so. Let's assume they did issue those 1099s. During the part, but in the real life, you would ask the client this question. And honestly, in real life, if you don't know the answers to all these, you would have to have the client answer this. No, no. I'm looking at this byline right here during the year. No. Did the partnership condition? No. Does the partnership satisfy one of the following? No, this is not the case. This is not the case. This is not the case. Okay, so ordinary business income you could take out of page 1, line 22, 26,600. There was no net rental real estate. There was no guaranteed payments. There was interest income of 150. There was dividends. Remember, qualified dividends and dividend equivalents were also noted in the example. So this is 27,000. That is 27,000. That is 26,600 plus 150 plus 250. That is 400. So 26,600 plus 400 is 27,000. Okay. That is Form 1065.